At a moment when so many of the high-flying semiconductor stocks have been having a pretty difficult time, except for today, it's worth remembering that a number of the older, more value-oriented chip makers have been performing incredibly well. Take Integrated Device Technology, IDTI. That's a developer of low-power, high-performance chips for a host of niche markets like next-generation communications infrastructure, high-performance computing, power management, clock timing. Stock's up 32% year-to-date. Philly Semi-Index down 5%. This stock has been climbing for one simple reason. IDTI is doing very well. It is executing. The company reported a strong quarter 3 weeks ago, a nice top and bottom line beat, driven by the strength in their communications and wireless charging businesses, with expanding gross margins and management increasing its buyback by $300 million, bringing the total repurchase authorization to over $530 million, or roughly 14% of IDTI's current market cap. That is huge, and it's doing an acquisition, too. Even this volatile environment, IDTI has continued working. It's now given us a roughly 12% gain since we spoke to the CEO last. That was 6 months ago. Shares now trading only a bit less than a point off their 52-week high, unlike so many other semis. So let's take a closer look with Greg Walters, the president and CEO of Integrated Device Technology. Learn more about how the company's doing and where it is headed. Mr. Walters, welcome back to Mad Money.
Thanks, Jim. Good to be back.
All right, Greg, this was really, you did a remarkable quarter, and a lot of it's just things that you've invented. Can you tell us about some of the things that you guys have created in the last couple of years that are responsible for this earnings breakout?
Yeah, it's been a great year from a product perspective. And if I were to describe a little bit about the IDT culture, we like to think that we bring in operational and financial excellence the way we approach business. But this is a product company with a product culture. So for instance, since the last 6 months that we spoke, we did ramp these new technologies and wireless charging in the middle of the most mainstream, some of the most mainstream smartphones, PC monitors, gaming sets in the world. The data center, which represents about half of our business, we've introduced more new products in that area in the past 12 months than we have for the past couple of years, as a matter of fact. And the communications infrastructure business, which has been a little bit down from a global market perspective, we continue to outperform the market in that area. And all in all, it's been a terrific last 6 months for new products.
Well, I've got some of your products on set, including an IKEA device. I was curious, I asked a lot of younger people, I said, what do you guys know about wireless technology? One guy says, oh, it's based on solar. Another guy says, oh, it doesn't work with phones. And I said, I'm just going to ask Greg Waters, what is wireless technology and how does it work?
Sure. Wireless charging technology, if you think about a good analogy, is kind of like the early days of Bluetooth, where you started to get rid of wires for short-range communications. And what wireless charging does is the same exact thing. It allows you in any consumer device, whether it's a smartphone, a tablet, a PC, or any device like a gaming station, to basically cut the cord. And you're able to either charge the battery or get power to that device, without wires. Now, some of the obvious implications of that are where we've ramped that technology in high-volume smartphones, which has been a tremendously successful year for us and the industry as that's starting to roll. But, Jim, I think you're going to see in the next 12 to 24 months just an explosion of the types of applications that can use a wireless charging technology. We have this stuff designed into cameras now, into game stations. It's into this IKEA lamp that I believe you've got in the studio. And right now, we actually introduced some new mass market kits and some promotions through like the hackathon, if you will. And there's over 200 registered new designs coming in the wildest, different, most applications you can think of.
Well, you also did something pretty amazing. You diversified away into you bought a German company, ZMDI, which apparently, while many of us don't know because it's private, is going to get you into a whole nother source of applications that can make it so you're not just hostage to some of the devices we talk about.
We did. We're very excited about this because if you look at where we focus the company, and one of the reasons you were kind enough to point out some of the outperformance of the company versus the rest of the industry, we're experts in this class of technology that we would call analog mixed signal. And that puts us into the data center, into our communications infrastructure. And we basically power the mobile internet and all of the stuff that people don't see. So for instance, every 4G call goes through a set of IDT phones. Most of the data processing in cloud data apps is being processed through a set of IDT devices. In consumer, we've got the wireless charging area. But what this company does in ZMDI is they also, like ourselves, are experts in this analog mixed signal, but they put us squarely in the middle of the advanced automotive electronics now. representing a fourth avenue of growth. So if you take a look at the markets that we're in, which we think represent a terrific opportunity for future growth, we now have just planted ourselves right in the middle of the advanced car industry.
Well, one last question, Greg. Even though you made the acquisition, you're also buying back a ton of stock, including more than the cash on hand. It prudent to do that? Are you that confident about the future?
Well, I think it's prudent, and I think it's something that is just walking the talk of what we've mentioned in your show before, Jim, as well as our commitment to the shareholders. We have right now a free cash flow performance of a company, and we're a small cap that rivals the very best of the large cap companies. Our last trailing four-quarter free cash flow was 27%, and it's climbing. We've got a stated goal of 30%. So we're generating more cash right now than we need to run the company. We said for some time that we're committed to share buybacks, and we have been buying back steadily for more than the past 18 months. And we did, as you mentioned, just reauthorize another $300 million and are accelerating our share buyback as we speak.
Well, your buyback has been done very well because it's well below the market. Greg Waters, President and CEO of Integrated Device Technology, IDTI, one of the best ones we follow. Thank you so much, Greg.
Thanks, Jim.
Guys, better technology, better products, better balance sheet, better buyback. This is a good one. IDTI. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.